what is going to be that catalyst for rates to settle down? We've got just craziness happening around the world. I mean, if you took a look at the UK gilt, 30-year gilt, we hit levels that we have not seen since 1998. What is going on in fixed income broadly is just unprecedented.
Yeah, and again, we keep hearing this expression by people who kind of get some of this macro stuff better than we do, that something's about to break. And if you look at what's gone on in basically the British town, we've been talking about what's gone on with the euro, the 20-year, took 20 years, the BOJ intervention there with the yen. I mean, there's things going on here where stock markets are just kind of a pawn here. And we're sitting here trying to find out individual names. And, really it comes down to, Mike Wilson, who comes on the show a lot from Morgan Stanley, he just took down his S&P estimates, and per FactSet, they're coming down, year over year. I think, 9% growth was expected. Now consensus about 7.5%. You tell me what the right multiple is in a recessionary environment that we have not even hit the recession yet, and we're going to be in a profits recession. I don't know. You want to put 14? You want to put 15 times? He's got $2.12 in earnings for next year. You put 14 on that, and you get below 3,200. It's not far from Guy's level here. So again, nothing's going to go in a straight line, and the C word is a dangerous word, especially this time of year. I just don't think we go down there like that. Well, the crash. I mean, I didn't know.
I didn't know where it was going, but I got it.
You made me say it. I didn't want to say it. I don't want the headline to be that. But my point is like it is one step forward, two steps back in bear markets like this, and that's clearly what we're in.
Well, the C word could also be double C or C squared or constant currency. And all we hear about is the dollar. But what we haven't heard about, even in mega cap tech, is in constant currency terms where they're going to cut. In other words, we know the dollar has been a beast and is certainly a major headwind. And I think that at some point it becomes a tailwind. The dollar is so overbought. Doesn't mean it can't go further, especially based upon what's going on with the differentials in policy. But I haven't heard talk of budget cuts as it relates to enterprise or CapEx or software. That hasn't flowed through from any of the mega cap tech companies. And again, forget the dollar. How about constant currency? How about, some of these companies that really have been the lifeblood of this move? Again, Apple's outperformed the S&P by 175% over the last 5 years. It's clearly been a major boost to the entire marketplace. And I just don't think those comps are things we can hold up.